Today is Wednesday, the 11th, and the S&P 500 really looks like it's determined to get down to that volume weighted average price from the COVID low. I had previously had that on the weekly time frame, which is why it's showing where it is. So let's just adjust that over to the daily. Anyways, the point is it's down in that 385 area. 380 is the 38.2% retracement, and that it seems like it's magnetized towards that level. Whether it happens on this leg lower is anyone's guess, but we've got a lot of momentum, and it sure seems ripe for some panicky selling because it still doesn't feel quite panicky yet. So don't think we're out of the woods yet. We're not down too much. There's no such thing as down too much when there's no bids and there's still people looking to raise money. Some people were talking about lighter volume on the decline today. Who cares? We don't get paid for volume. It's the most ridiculous thing to look at. I've been using that word a lot lately, ridiculous, in terms of what people look at and what people tell you to look at. The fact is, only price pays. When they go down a couple percent on light volume, it's no different than going down on heavy volume. You lose just as much money if you're long, or you make just as much if you're short. And hopefully, you're looking at this on the short side of the market. I had posted on Twitter just to really kind of show the concept. That even on here we see a 1 minute chart, and later in the day we had this sell off. It got extended to the downside, and then it rallied up. So I put a volume weighted average price on that. And as it came down to that volume weighted average price, of course, I wasn't interested in shorting it right there because it had just dropped from 398 and a quarter to 396. I was looking for it to do something along the lines of this and then decline. Instead, it came down, hit that. I decided to short right in here. My stop, as I mentioned, was about 396.40. I didn't have it there. My stop was actually just above this level, and I covered some in here, and I covered the balance at the end of the day simply because, what if we get a bounce up tomorrow? I'm not interested in holding on as the market, has maybe a little bit of a relief rally on the open, which we see often. Instead, I want to be aware that the risks are, again, it could gap higher. And I wasn't trying to show a day trade. What I was trying to show is the same exact concept we talk about on 10-minute charts, 15-minute, 30-minute, 65-minute, daily, weekly, monthly. Support broken on a VWAP tends to act as resistance. Enough on that point. So even on a 1 minute chart, that is. And you could do the same thing with the Nasdaq. Same story there. It wasn't as clean, but anyways, back to the bigger time frame. The daily chart. We're approaching the 50% retracement. We've got the volume weighted average price up next from the 2019 low. That's how bad this market is getting, and there's nothing to suggest that that will be the low. We will experience strong bounces. We've seen several large bounces this year. If you're interested in the bounces, just wait for the shorter term time frames to trade against the primary trend. If you're buying, 500 shares, 1,000 shares, 10,000 shares of Qs, it doesn't matter when the institutions are selling tens of millions of shares. The trend is lower. We're below a declining 5-day moving average. We're below the VWAP, etc. Russell 2000 has been the worst market. It's right on a level that's supposed to be support. Some people will say it's at support. Those people don't know what support is. Support is only something known after the fact. This is not support. It might become support. Resistance broken tends to act as support, but there is zero evidence that there is support in there right now. None at all. This is not a reason to buy just because we're at this level. It is not some, magic area where buyers are just going to cover all their shorts and get long. That's not the way it works. We need to see, bounces, and then we need to see that 5-day moving average flatten out. And where does the eventual low come in? It might be years from now. We simply don't know. We'll take it the way we took it on the way up after the COVID low. Is once it started making higher highs and higher lows above a rising 5-day moving average, we were cautiously long individual stocks. You don't have to nail the low in the market, and you don't have to keep hanging on to all the shit that's falling apart. Semiconductors, still look like they're, poised to do something along the lines of this. We're below the COVID volume weighted average price. We've been stuck below it all week. We're below a declining 5-day moving average. If you're buying stocks like Nvidia just because they're at the volume weighted average price from the COVID low, you don't understand the point of this volume weighted average price. It's a reference point that says here's a potential level of support. We've come down a lot. Maybe buyers show up here, so we look to the shorter term time frame for evidence that the buyers are in control. There is no such evidence. This support became resistance. We have a declining 5-day moving average. There's no reason to just blindly stick bids into these stocks just because you like them and you think they're good companies. Good companies and good stocks are completely different things. The biotechs continue to do what they're supposed to do. They are the poster child, as I've been mentioning over and over for all year. They've been the poster child of a failed move. This trend line was the last place they found resistance, and then they broke down once they got below this volume weighted average price. Then it meant the sellers had regained control over here, and it's been bombs away since then. Even if you look at the 15-minute time frame, we got a bit of a bounce last week. It didn't really add up to much, but once support was broken, lights out once again. Stocks in downtrends, markets in downtrends continue to go lower. They go a lot lower than most people expect them to go. I was talking about Tesla. Tesla, it's down to the volume weighted average price from over here. It seems to me that it's inevitable. It doesn't mean right away, but inevitable that it will come down to the volume weighted average price from the COVID low. That's still 25, 30% lower. If you're long this stock to the gills, do something. If there's a bounce, sell some calls against it, lighten your position. I don't know, but you know, it can do it. They get every single stock in a bear market. Look at Amazon. No one thought it was going to do that. The chart told us. Look at ARK. It's a complete piece of garbage. People continue to say, "Oh, but she's a visionary, etc." She has vision for losses, and they're being realized. Financial stocks, we mentioned over the last several weeks that they look very similar to the Russell 2000 did over here on their initial breakdown. Financial stocks, it looks inevitable that they continue down to $32.